Alright guys, so we've just released this free indicator to help you gain a 70% probability with your bias. So this is absolutely one of the main confluences I use when trading in helping me to stay on the right side of the market, and I decided that, you know what, let's put it into an indicator, let's give it back to the community for free. So I thought I'd do this video just explaining some of the stats behind it and the indicator itself, right? So let's get into it. How to get the indicator. It is published publicly, so all you need to do is go into your indicators, search MaxAlgo. If you put a hyphen on, it'll come up, and you'll see there we've got higher time frame bias table. When you click that, it'll add this table to your chart. Okay, so let's just talk about the first element of the indicator, the 70% probability, right? So up here you can see this table, and what this table is doing, it is calculating the probability of when a candle breaks. This is for an hour, right? So when we break the previous hour high, what's the probability that that candle then closes bullish, right? So we break the high, did it close bullish? So you can see here over 2,000 bullish candles have been checked, right? Way over 2,000. And you can see that 73% of the time, when we broke, like we've just done now, when we broke the previous hour high, we then closed bullish 73% of the time. And on the bearish side, you can see that 70% of the time we closed bearish based over that large amount of data. Now this probability actually works across any time frame, right? Which is why we have multi-time frame in here. The only difference being is if you can't use it for New York Open, right? Because high volatility. So any high volatility which is unpredictable is going to kick in. That is going to adjust the stats. So if we've got high impact news, again, that'll impact the stats. Now higher time frames like the monthly and the weekly, then those sort of things obviously won't impact the candle as much, but the daily and the hour and the 4 hour, it will impact it. So you can see here at the moment we're set to use in 1 hour. Okay, so if I change that to the 4 hour candle, you can see the stats change, and again we're averaging around that 70% probability. And then I think on the daily, so if we went up to the daily, we want to use 1 day, right? And we go up to the hour to collect more data. You can see at the moment for that we're currently running at 66% and 67%, so slightly lower. We go higher up on the 4 hour, it's a little higher, right? 70%, 67%, so around that 70%, but it's still in, right? It's still something to make a note of, that once we've done that, right? Once we've taken that previous daily low, that it is in our favor to close bullish or bearish. Doesn't necessarily mean that we have to carry on, right? It just means that we have to close bullish or bearish. And this is really great for then helping you to range where do we think are sort of ranges for the market, right? Or other things which we'll go into. So that is it, hopefully explained the stat and how it works, right? So if we look at an hour candle, this is an hour candle, right? So we broke the previous hour high, and the candle closed bullish. We've broken the previous hour high. We expect the candle to close bearish. We took the previous candle low. We expect that to close bearish. You can see how this goes, right? Take low, close bearish. Take high, close bullish. Take high, close bullish. Take high, close bullish, and so on and so on and so on and so on, right? I mean, even this massive candle here, right? We took the low of that candle, and you can see how that carried on through. So what I also have built into this, that while there is a neutral, so when we haven't taken the previous candle high or low, it'll look back again to say, well, what was the previous candle to that? What was the outcome of that? And it'll change the color to say, okay, well, the trend was we were taking lows. So we're going to highlight it in red. So you can see the weekly is currently neutral. We haven't taken the weekly high or low, but the last week to go was bearish in that we took the previous weekly, because often we will see that slight continuation in taking lows and continuation in taking highs, right? So that will also help you in, okay, I haven't had a bias yet. However, I've got some bias of being able to say we have been on a bearish trend. Okay, so that is what this is doing for you. Really importantly, to add to that is then what is the current candle, right? So this is our price action. So this gives us bias, helps us with, okay, where our range might be, where price could go. And then this is what is currently happening, right? So a good example of this is our 4 hour right now. So our 4 hour has taken the previous 4 hour low and is currently bearish, and our 1 hour is currently bullish and has taken the 1 hour low. And this gives us a range, right? So our 4 hour started at 2. So 2 o'clock, right? And then we took our previous 4 hour low. Or is it 6? We're just about to get a new 4 hour now, right? So there's our 4. And I'll make this easier for me. Let me just add on. There we go. Okay, so here's our previous 4 hour, and you can see that we took the low of that 4 hour, right? And here's our current 4 hour, and here's our current hour. So right now, for this statistic to play out, the 4 hour candle needs to close below here, and our weekly candle needs to close below here. And then this gives us our range when we get opposing factors, right? That for this to happen, and we had the same thing here, right? So we had our range during this hour, top of the range, bottom of the range. So when we took the previous hour high, this gave us a statistical probability of closing bullish while our 4 hours bearish. So we know more likely we're going to chop like this, right? Because we haven't got aligned price action. Once the 4 hour is aligned, this can then give us that edge. So you can see here, we took the previous hour low, so bearish. The 4 hour was bearish, and we had aligned price where we got that continuation, right? Now this this hourly candle took the low of the previous hour, which was here, right? Meaning it's more likely to close bearish. Well, here was the open for it to close bearish. Had to close below that level. When we came above, guess what we did? We returned back and closed bearish, right? So it's just giving you that, okay, we're having a run from here. It doesn't mean price can't go bullish. It's just, okay, well, until this hourly candle closes, we're still expecting a good chance to close below that level. And you can see that's exactly what we did. New hour opens, and then we get a whole new stat again, right? So now we can carry on that bullish trend, take the high, and close bullish. Okay, so that is how I use it and how I trade it, obviously with alpha zones. But that is one of my main confluences when looking at price. It's how I'm able to stay on the right side a good chunk of the time. You know, the last 3 weeks in the lives, we've had our directional bias right every time by simply following this simple strategy of where are we, what's the higher time frame, where does that conflict with, and what's the current candle. Okay, so all you need to do is add that on, and it will tell you what the current 15, 1 hour, 4 hour, daily, and 1 hour. Of course, you can go into the indicator and you can change the location and you can update which time frames you want to use. So if you want to scalp on the lower time frames, you can adjust yours to show lower time frame candles or even higher time frame candles as well, right? You just need to make sure that, like for example, if you're using the monthly, that you've got enough data on the time frame you're on, right? So if we go to our 4 minute, we can see that currently the monthly is bullish, right? So this is one of the things we were talking about last week. So although the weekly candle went bearish, we had that massive push, the monthly is bullish, and we expected our monthly to come back up on NQ and close above the monthly level, right? So this is how we're able to kind of find that conflicting price, where that trend might end and where price might push back up. This has made a massive difference in my trading. It's really helped me towards profitability and consistency. If you want to talk to me and if you want to follow along and get tips and get help, then you can do that on X or on YouTube. So on X, it is at ZooFXing, right? Jump on, follow me, comment, any help you need. Happy to always there. Or obviously subscribe on YouTube and follow along for future updates and future videos. But yeah, I really hope this helps the community. As always, this is based on something that is being used and how it's helped us. So look forward to talking to you guys about it, and I'll see you on the next video.